Good morning. And let me, something's wrong here. There we go. There we go. And I'm Doc. Most of you, I'm assuming, know who I am. And welcome to my daily plan where we map out what we expect to happen in the S&P 500. And we talk about a few other things today, intraday, zero DTE, as well as going forward somewhat. If you're interested in this content or know somebody that might be, click subscribe and look at the description in the box down there somewhere, wherever it is. And there's a link tree bio and all that kind of stuff. Okay, so I'll look at that. We're at the inflection point. And we'll talk about why that's the inflection point in a moment. Oh, and let's take a look over here. So where did we bottom out overnight? Raise your hand, everybody. 6850, round number. Shocking, right? And we'll see when we look at the gamma chart why that likely happened. And if you're interested in learning more about how to look at market makers, gamma exposure, what that is, and how to incorporate that with whatever system you're using, or use that as your main system, then you're in the right place. Okay, so I guess we'll start with over here. Overnight session, down goes Fraser, pretty much cascades straight down. The headline that I saw before I went to sleep, or when I noticed that cascade, was something about Trump may do like a softening up attack and then on Iran, and then kind of do a larger scale action as planned or something like that in the New York Times, which we know is very credible. And so, yeah, I'm assuming that's what it was. I didn't go headline hunting last night. We kind of bottomed out, and I guess when Euro opened and when the grown-ups kind of came in, we popped right up below 6,900, also a big shocker. And so now we're kind of, we could say we have that 50-point range, which is about the expected move. Okay, let's switch gears for a moment. And this is my daily plan. And if you are interested, again, you can click the subscribe button somewhere. I'm not sure where it is from your orientation. And so Friday was a classic headline rug pull day. We had the Supreme Court decision. Volatility was juiced. Everybody was saying disaster, disaster, disaster. And so here we are. And I think that's a theme going forward. I'm not sure when. Top right, subscribe button. Thank you. Top right, over there. And I'll get to this in more detail later, and I wrote a detailed piece about this on the weekend. It's an article on Twitter. It's in my Substack about basically the right tail that nobody wants. Call skewers in the toilet. People don't want to own calls. They're selling calls, buying puts, which sets up a dynamic where it's definitely fragile. If we start to go down, if we get a big spike, if we break levels, we get a reflexive, kind of drop, one of those 100, 150 point, 200 point drops in a day, 2 or 3, maybe. However, if volatility should fail to realize, if we don't get there, then that provides a tailwind up. We saw a mini version of that on, what day was it? On Friday. We saw a mini version of that, or a pretty big version of that, about a week or so ago, when we went to all-time highs after being down below 6,800. And so that's the setup again. What's a little different now is that we just had the February options expiration, the big options expiration. So we're just free to move around more because the hedging is going to be dictated mostly by the local gamma. What do I mean by local? Local today, 0 DTE, maybe in the chain this week. And the hedging for the larger positions out in time, say the March expiration, the big quarterly, gamma and gamma hedging, delta hedging is time dependent. Or gamma, the rate of change of delta is time dependent. So if I'm a market maker and I'm long the 7,000, the 6,900 call in March, I don't have to do much. If I'm long the 6,900 call today, it's something I got to do. And so versus a week ago when the February options expirations were influencing the 0 DTE to a greater extent. Hope that's clear. Okay. Anyway, I have a little thing here. It says Twitter is experiencing issues with live streaming posts, blah, blah, blah. If there's anybody on X, let me know on Twitter.
Sorry, Doc, I was on mute. Don't worry about that. It's been there for days.
Okay. All right. Thanks. So let's talk about this. And I bring this tool up a lot. I'll just show it to you here. This is the VIX decomposition index. And what it does is it breaks down the parts of the VIX volatility index, the 30-day, that moved and why they moved. So what happened in the vol space that influenced VIX? VIX comes to us as a monolithic number, but it's actually an aggregate of market participants' expectations, let's say, the volatility that they paid for all the different strikes in the SPX done by that magic formula. And actually, if you read the paper, they have more elements than these elements. They just kind of, for the little cheapy beta thing, they give you that. Okay, so a sticky strike. So a big chunk of the strike of the move was sticky strike shift. What does that mean? That means we moved to a different neighborhood. Volatility moved to a cheaper neighborhood. It moved from the Upper East Side down to, I don't know, from the Upper East Side down to the Lower East Side. So moved to a cheaper neighborhood. It moved from New York City to Little Rock, Arkansas. So it moved to a cheaper neighborhood, and so it shifted down as we went up. Parallel shift is they ended up paying more. The parallel shifters did the same thing, but put skew didn't really move that much. Parallel shift helped, but downside convexity stayed big. The downside convexity, the put skew, didn't go down. So if it didn't go down, that means people were still paying up for puts. So parallel shift and the parallel shift is the restaurant analogy is if I have a burger joint and the price of beef goes down, then I'm gonna lower the price of beef. The sticky strike is the neighborhood that my burger joint is in. Is it in New York or is it in Little Rock, Arkansas? And the parallel shift is the price of beef. Okay, so what we have today, a nothing burger on events. Waller spoke. Okay, great. No, major earnings. Duke Energy, maybe, Domino's, so they beat. USAR, I think, is important. That's the rare earths company that the government's gonna put money into, whatever. That's the whole re-industrializing or making America great again, and we have to do our our resources at home, not be dependent on foreign actors, which makes sense to me. I don't know. And so they reported before the open. I didn't see results. I'm going to check it. I have a position in this, both shares and options. And I've been in this one for a while. This was no big secret. I've been in this one for, I don't know, a year or more. This one's no big secret. Seemed like a no-brainer at the time. And the other one is MP. I haven't looked at that one in a while. And then after the bell, we have BWXT, which is nuclear, and that's been a hot sector. Keys, which is a semiconductor-related software thing. That's a name that I've traded a lot. Also, it's one of these obscure names that kind of moves around a lot. So anyway, and in the server, I talk about trades to consider, not necessarily based on these, although we do have people that do earnings trades as well. My focus is primarily on the SPX and a few other trades, just kind of to keep it real. All right, so the expected move when I looked at around 530-ish, whatever, it was about 50 points or 40 points. It was okay. And that put the bottom at 55 and the top at 35. I don't know that we realized to the top. Okay, let's talk about the MAs. I'm old school. I like it moving averages. Simple, not EMAs or whatever versions they have. And so real simple. And I draw my lines with a crayon, not with a fine-tooth pen. And so we have the 50-day at 68.90, and you saw we undercut it last week for a couple of days, and we reclaimed it. We went both directions of it on Friday. We closed above it, and we tickled the 20-day moving average. And so we have converging 20 and 50-day moving averages. And we've seen this pattern for a while now. We've seen this pattern. I'm going to put on my old school TA hat, where we converge, we squeeze. We want to see this kind of railroad track pattern, parallel 20 and 50. It's kind of a healthy trend kind of look. And if the right view unowned tail narrative plays out, and if volatility bleeds out, maybe after NVIDIA, maybe after Iran, who knows when, then I expect to see this go parallel. I expect to see probably new all-time highs and beyond, to be determined. This is the expected move. Let's talk about that. So the expected move for Friday, as taken last Friday, was 67.80-ish, 90-ish on the bottom, a little bit below 6,800. Call it last week's low, 67.80, whatever. And the high has been kind of coming in. The top of the expected move, but I mean, it's still up at 670.35, new all-time high, 7,000 higher. Volatility sellers, funds, institutions have been selling those 7,000 strikes, 70, 50, whatever. They've just been selling them, keeping us suppressed, because when a customer sells them, market makers buy them, they're long. That's long gamma. It's mean reverting. So as you head toward it, it pushes away. But then as you move away too far, they're too short, and it grinds up. Now, if you want to know more about this stuff, I believe there's a link somewhere. For our subscribers, we're launching a course, I guess we call it, an accelerator, I call it. We'll talk about why we call it that later. And yeah, so that's available too. So anyway, that's what's going on here. Let's see. I don't know what happened to Vol Trader. He has some interesting toy he was going to share with us, but he's not around. Let's get back to the. See, this is good. This keeps me focused. Because as you see, I can, I can go off on tangents. Okay. So that was the earnings stuff. Back to move for today. We talked about the MAs. Okay, so here's 3 quick structures. The detailed stuff is going to be further down in the roadmap, and I'll be talking about that, on this on the in the Discord server. But here's the quick gamut at a glance. 6,900 round number. That's the store lid, and we'll look at that more closely. 6,850, 6,900 is a chop box with, I can't lie, with the 6,885 right here. So we bounced off of this zone. We had to 6880, 85. We get hung up in this 80, whatever this is, 75, 80, 85 box. We get over this box. We stall at 6,900, over 6,900, clear skies ahead, similar setup to Friday. And that 69, 20, 25 area, you have more selling, and then, kind of stall out there. The below box. We bottomed out down here, big line. Go look at that. The big lines do something. Go figure. And so from down here, we kind of bounce either at 60 or 50 to head back to here, or if this breaks, that 55, 50 area. Should that break, and I'm kind of doubtful that it will unless we have a reason for it to break, 68.35 is the target. Now, I don't know how many of you noticed, I've mentioned it before, 68.35, kind of a unusual number to be popular, has been bid a lot this last week or so. 68.35, whatever reason. Now, also, let's remember that not this Friday, last Friday, after we had a shitty week, we ended up closing at 68.35-ish. Tuesday, we came back, bounced around, closed at 68.38-ish, like 2 or 3 points higher. The next day, we closed at 68.40-ish. So that area right here near the 68.50 has been kind of sticky from a price action standpoint and also from a customer interest standpoint. So pointing that out. All right, and I guess that's it. And then we go into the daily plan, which is, okay, I'll talk about this. VIX drop looked mechanical and calm. Not a fear exodus. It's not like people threw in the towel on puts. You saw, I showed you before that, tails stayed bid. Convexity didn't go down, which means that people still wanted it. Sticky strike did the work. Tails didn't flush. Skew is still elevated. Okay. Post MOPEX thin. I talked about this. VIX 9-day. Okay, let's talk about that one. Without having fixed strike vol and fancy stuff, okay, Waller. He's kind of on the dove camp, so he's going to say stuff the market likes. So what I'm going to be watching today, let me get, SDEX is the Nations Index. That's the 3 standard deviation out of the money. Options, that's the wingy stuff. But if we want to look for what normal people might buy, TDEX, where is it? SDEX? Where's SDEX? SDEX, no, I hit 10. That's TDEX, where's SDEX? Somebody help me with the alphabet. I'm going to PQRS. Where the hell is it? There we go. SDEX. And you see, I guess look at the pattern. People are still bidding up protection. still bidding up that 1 standard deviation out of the money, what your normal hedge would be, so to speak. Okay, volatility of the vol came in, but still elevated over 100, went up to 100. Let's talk about two more things. Okay. If you've been following me and listening to this broadcast or seeing the stuff that I write, which you can see on Twitter, on Substack, I'm all over the place. In different Discord servers, I'm all over the place. I call BS, bullshit, on this VIX of 20.2 versus a VIX future of 20.4. Historically, this difference should be, quote unquote, about 2 points. So this should be about 2 points lower. 1.5 if we're a little jittery, 1 point, 2.5 or 3 points if the market is, kind of like a little high on a little euphoric. And we've seen this almost every day recently, where pre-market VIXs appear, then these two get somewhat back in alignment, the VIX futures and the VIX. And then we kind of do what we've been doing, bouncing around with VIX. I like to look at the VIX 9-day versus the VIX and what we've been seeing. The VIX 9-day captures this coming Friday. Go forward in the future 9 days and go the Friday before, the Friday after. So this captures NVIDIA earnings, the VIX 9-day, and it captures the following week, which I guess is the end of the 10 to 15-day window that Trump gave Iran. And we know that he sticks to these, with the iron hand. And so this 2 points is a little too low. And we've seen lately we've been seeing the VIX 9-day going up more than the VIX. Short-term fear. That short-term fear tells me that when that subsides, when the catalyst for fear goes away, that's that potential. And NVIDIA earnings is one. The Iran thing is the other. Those are the two main blemishes on the board. Okay. I'm going to stop here. You got some charts for us? I'll wait for Chewy to get his charts ready. In the meantime, I'll look around at some other stuff.
No, not yet, Doc. Still getting my ducks in a row here.
Okay, so while you're lining up your ducks, let me just pull up something. Where was it? Was this what I was looking at? No. I was looking at this. So this is a simple fractal chart, your multi-time frame, taking the supports and resistance. Even when I used to do, I back in the day, I did all the TA bullshit, the RSI and the DMI and the Bollinger Bands and all that. And there's validity to it. I still glance at it. But I eventually came to kind of look left pivots as my go-to. And I still use it. So this is a fractal indicator. So it just kind of tries to take the multi-time frames and find the levels. It's pretty good. It's on TradingView. It's free, I think. And I like the way we bounced off of 68.50. The fractals seem to be working pretty good. What's it called? I don't know what it's called. It's called Multi-Time Frame Fractals by Run Rocks. So I don't know if you like indicators. I'm not a big indicator guy, but overnight I wanted to glance at something, and this is what I glanced at. Okay, you ready? Or you want me to keep babbling? I can keep babbling if you want.
Are you talking about me?
Yeah,
no, I'm probably not going to have them ready for a little bit.
Okay, so I'll
post them in the server though.
No problem.
Sorry, everybody. The snow here in New York was delaying the trains pretty drastically this morning.
Yeah, I still don't know why you go to the office, but okay, get out of the house, I guess, so you don't fight with the wife. I get it. Okay, so let's look at so here's that same gamut chart without the annotations, and you see a 6835 to the left is magnet if you're close, otherwise it's a nothing, otherwise it's decay fuel up. 6850, we saw all this stuff. What I want to do right now, two things. Let's switch to VIX real quick. Let me make sure I have the right expiry on. Okay, yeah. All right, so the VIX monthly. Now, when we were looking at this before the February VIX options expiration, this is options depth, ladies and gentlemen, by the way. This is where market makers are short options, customers are long them, they bought them. What they buy? They bought calls. So we have 19 to 20, and we have some sold calls up here. Why? Those are butterflies. Those are flies. That's what I do. You can do tight flies, you can do wide fly. Those are flies. Those are call flies. And then you have some of these stuff up at 25 on the other side of the fly. Some of them are kind of further convex bets, and we can go up higher, but I'm not going to show you the 30s and the 35s and disaster stuff. But what I'm showing you this for is path from 19 to 20, kind of where we've been going, maybe 21-ish, we should stall. And this is what's going to have to be hedged, but it's March 18th, so the immediacy of the hedging is a lot less than it was when there was a week to expiration the week before last, and when VIX was kind of acting nutty. So part of the reason VIX was acting nutty was this dynamic, which the setup is not as much negative gamma ladder. Customers won't long as many calls that market makers have to hedge, and it was more immediate in terms of time. Okay, that's that. Now I want to go back to SPX. Wow, I'm doing good. 9 o'clock, and I covered a lot of ground, I feel. Hey, guys, do you feel like I covered a lot of ground today? I think I did. Let's look at depth view. At depth view, this is just the same data, bar charts, only in table form. My brain likes tables. My brain likes bar charts. My brain is not great with 3D surfaces. It's okay. It's not great. I think that's just years of our school system, and our culture doesn't like us to think in 3 dimensions holistically. It doesn't like us to. We think in a binary way, and these kind of charts are binary. The human mind works binary. Lion danger, yes, no. So there's a psychoevolutionary reason. Oh, and there he is. See that? I'm done with my TED talk. Go ahead.
Sorry, I wanted to put an end to
No,
that
good. I was just pontificating.
I'm kidding. All right, guys. Pretty empty chart this morning for us. What I'm looking at here is 6917 as my top of my range, ceiling 6866 as the floor to my range here. Pretty big range, and we've kind of have a cluster of 2 sticky levels with our pivot in between. I wouldn't be surprised if at open we kind of maybe shoot up, shoot down, and then hold this little range here in between for a little bit. I am seeing some interest here at VIX 20. So we'll be watching that. If it kind of starts veering up, I'll look to take longs into this reject zone and then potentially bring it all the way back down to my pivot.
Okay, and that corresponds to around 68.95, 6900, above which we had a gamma dead zone. We had a right up to that level where you're saying you would close out.
Yeah. So that's kind of my first take on today. I really would like a pop for some downside. Plan B would be to hold below pivot, kind of grind all the way down to our floor for a target. And then potentially below, I won't take the shorts from the floor to the target, but I'll take the bounce from here to the floor and then to the pivot. So 2 scenarios that I'd like to play out. I think it's not out of the table for me to think we can squeeze up above 69.30, but I'm not, that's definitely not plan A or B or C. So keeping that on watch.
Yeah, from my side of the table, over 69, 10, 15, 20, 25 for sure is going to be hard. It's going to be hard. Unless we have a vol crush for some reason, the Iran thing is whatever resolved or whatever, which I don't think is likely to happen today.
And as always, the charts are posted in the server.
Okay. So also, I just want to point out that while 6,905 is positive gamma, market makers are long, you guys know the basic idea, market makers sell into that. These numbers aren't that huge. I don't know how well you can read the numbers out there in YouTube land, but it's 800 contracts, 300 contracts, so it's not a lot. So there's not a lot of gamma, quote unquote, for today. What does that mean? It means the market makers are going to be playing with a light hand, not a heavy hand. Where we see a number like 1,000, okay, that starts to matter. I mean, 800, 900 matter too. 1,000 matters at 68.50. That's where we bottomed out. That's where it truly has headlines too. Below 68.50, 68.35, I mentioned before, that matters over here. And below that, if if we fall into here and don't get a V, we often get a V reaction off of these numbers, maybe an undercut and reclaim and get a V. Over that, there's nothing from a gamma point of view. Now I expect vol sellers like myself to come in and sell. I'm not sure where they'll sell today. I haven't looked at the chain, but I kind of have a feel for how they operate. Probably going to be around there where the 10 delta is. So if you look at a chart and find where the 10 delta is, that's kind of where they're going to be. They're probably going to be in here. I like it when they come in and reinforce a level that we already have, which happens with some regularity, and we get the updates in the server. See, I'll show you. I'm going to show off. We get the updates right here. Shout out to the owl who then, puts in all the updates. 220, 3,000 0 DTE calls, 6,900, 6,925, buy to open. When the iron condors come in the morning, we get those. Let's find an example of a morning iron condor that came in last week. I can't find one right now. I'll have one prepared for next time. Oh, they're going to be where the morning is. $68.05, 6,800 credit put spread to open, sold. 69.10 calls, sold. 69.20. So and that's where we stalled. So we get the intraday stuff. Remember, what you see in the chain now is not what's going to be there at the end of the day. This gives us a starting point to the roadmap, not the final destination. What did I leave out? Did I leave any? Oh, yeah, I left out one thing I wanted to talk about. So let's look at the road, just quick glance. Trust your eyes. What else is going on throughout the week? And we see for tomorrow is basically nothing. Small numbers. Those will fill out. 7,000 they sold. Okay, so we're not going 7,000 tomorrow. I don't think that's a shock to anybody. Wednesday, NVIDIA day, a lot of options sold way far away. So 69.70, they're saying is a top, 69.50, round number, possibly a top, but we see positive gamma selling supportive, or let's not call it supportive because it's also ceiling-ish in this area, 69.15. And below we have light, 235, 383, we have nothing. Down to 67.70, okay, we got some support. I would consider selling there. I think I probably already did, knowing me. And we also have reinforcements at 69.70 here on 226. But for, Thursday looks a little ugly, not terribly ugly, but a little ugly, with sellers on top. And Friday, well, we'll get to analysis of Friday on Friday, but people aren't shy. There's the long 5,700 calls at right wing, 69.85. And look at this right here at 69.25. We have some interest. So, heading in this direction, post NVIDIA might be an idea, a butterfly or whatever. 68.70 inflection point. 68.50 downside, 68. So let's not get it twisted. There's bets up down at 68.25 and all the way up on top too. And then the big stuff, 6,800 still matters. Now, getting back to what I was saying before, 6,800 still matters unless we don't get there. Then it matters because it decays. So we have all this potential decay fuel to send us up or to pull us down. And so we'll have to see how the journey continues. Okay, any questions, comments, et cetera, et cetera? Well, since I see no questions or comments, good morning, Tammy. Since I see no questions or comments, and I don't see anybody on X saying anything on Twitter. Does the Twitter crowd have ADD? They can't watch this and comment at the same time, like walking chew gum. Okay. Do you feel like we're going up or down first? Gun to your head. What's the path? When we say first, after, let's just say 5-minute wiggle. It's like the initial 15-minute opening range bar. I know it's conditional, but I'm going to put you on the spot.
You asking me?
Yeah.
Right now I think we I don't know, squeeze, but we do a nice little shoot up. If that holds, then I think we'll have a nice sell-off closer to lunchtime as time develops. If we start selling off now, then that kind of reverses my thinking. Really, I think it really just depends. Because I see open interest at VIX 22. I see open interest at VIX 23. So I just, I could see it going up there.
And as a vol seller like you, I also like to try to time where am I going to sell my initial tranche or what am I going to watch for. So if I see that little pop, that's when I'm going to look to sell my calls first. I typically love when I get in a tranche of each just to kind of start the day and then adjust from there. But I think I understand the intent of the question is kind of like, where are we going to go first? Undercut and reclaim the 20 SMA.
All right, guys.
So right now, we're under
the
20. Right now, the 50 is at 68.90, and the 20 is at 69.20-ish, I think. So reclaiming that, we kind of tagged it on Friday. I'm sorry, I stepped on you. What were you gonna say? Up, New York snowstorm. But when you see this, you don't trust your eyes. 6850 and 6825 and 6800 are on somebody's radar screen for Friday. Oh, you were saying bye? Okay. In that case, bye, see you. And that's basically it. Okay. I'm gonna hop. Oh, and for people in my Discord and out there and wherever, I've got another appointment today at 11. Well, it's at 1, but it's kind of far away. So I'm gonna have to leave it around 11. Not sure how long it's gonna take. It's one of those things that could be 15 minutes, it could be an hour and a half. I really don't know how things unfold. So depending on that, I may or may not be back for the close. Knowing me, I'll probably at least tweet something or post some stuff in the Discord or whatever, if I have time and when I take a peek at my phone or whatever. Okay, thank you everybody for listening. Click like, subscribe, retweet, reshare, and do all that SEO. Oh, new data available. Let's see, quick. Late breaking data. It's going to take a minute to load. While that's loading, take a look at unusual whales. And this is what we've been seeing a lot. Now, this is exaggerated. Well, it's the NVIDIA, so it's probably not exaggerated. Look at this term structure. 18, whatever, today, tomorrow, but then NVIDIA day. Then after NVIDIA day, but we don't really resume a semblance of normalcy until after April, according to this. Let's take a look at kurtosis or wingedness. And we see the wingy stuff is on the 27th, Friday. What was that wingy stuff? I just showed you before. That was those 6,800 puts down there and lower, all that stuff. That is this. And actually the wings above too. It's non-discriminatory wings. And so that's what we're looking at here. Okay, so that updated. And to see what the latest trades were, just click markers. So some of the 6850s are gone. Doesn't mean the holders closed them. It could easily be somebody who bought them for whatever reason. Insurance, they try to front run a drop, whatever. Other than that, I don't really see any, whatever little changes we have are small. 6,900, some of those closed too. So the 50s closed and so did the 6,900s. Opening up the funnel a little bit. And this is the kind of thing I pretty much do most of the day. Just kind of look at the charts and see what's happening and kind of like a play-by-play sports announcer. So anyway, goodbye, good luck, trade safe, and see you all tomorrow morning.